A significant shift is happening in the world of digital currencies, and it's centered around a project many have watched with keen interest. The Pi Network, a cryptocurrency designed to be accessible to everyday people, has just announced the launch of its very first exchange-traded product in Europe. Pi Network logo merging with the European Union, symbolizing the new ETP launch. This is a monumental piece of news for the millions in the Pi community, but it also matters for the wider cryptocurrency landscape. For years, the conversation has been dominated by complex technologies and high barriers to entry. This development signals a potential change in that narrative, moving crypto from the fringes of finance closer to the center of mainstream investment portfolios across the continent. This launch is not merely a technical update or minor product release, it represents a critical bridge between nascent digital currencies and the highly regulated traditional financial markets of Europe. An ETP makes it possible for a broader audience to gain exposure to Pi, without needing to navigate the complexities of cryptocurrency exchanges, digital wallets, or private keys. It packages the potential of a digital currency into a familiar, regulated investment vehicle. This move could be the catalyst that transforms Pi from a mobile mining experiment into a recognized financial asset, opening doors that were previously closed. The timing, August 30th, 2025, is particularly noteworthy. It comes at a moment when regulators and institutions are figuring out where crypto fits. While Bitcoin and Ethereum have ETPs, Pi's arrival is different, community-driven and mobile-first. In the next chapters, we explore what Pi is, what an ETP does, and why this matters globally. So what exactly is the Pi Network? At its core, Pi is a digital currency project with a bold goal: make crypto accessible to everyone. Founded by a team of Stanford graduates who saw a problem with first-gen crypto like Bitcoin, mining became difficult and expensive. It required specialized computers and massive electricity. That reality locked out the average person from participating. The founders wanted a more inclusive, sustainable alternative. Their vision? Let everyday people mine using the one device they already have, their smartphone. Users earn Pi simply by tapping a button each day. This removes the need for expensive hardware and expertise. The core idea? Build a secure, decentralized network powered by community members. Earning by tapping created one of the largest, most engaged user bases, even before tradability. Pi's mission goes beyond distribution. It aims to enable everyday transactions, a peer-to-peer marketplace where people could buy and sell using Pi. That utility sets Pi apart from speculative-only cryptocurrencies. The team has been building a wallet, a browser, and developer tools. Tools for developers to build on Pi. Ultimately, Pi is as much a social experiment as a technological one. It tests whether scale and value can come from prioritizing community and ease of use. By inviting millions from all walks of life to secure the network, Pi has fostered a strong sense of collective ownership, a key reason the ETP launch is a major milestone. It's a validation of a people-first approach to a new digital economy. Next, how mobile mining works and why the ETP matters. How does Pi actually allow people to earn cryptocurrency on their phones without draining their batteries or data? This is a common question, and the answer lies in its unique consensus algorithm. Instead of energy-intensive proof of work used by Bitcoin, which makes computers solve complex puzzles, Pi relies on a system based on trust. Security circles. Often called mobile mining, it distributes coins to users who prove they are real, engaged humans. It's lightweight with negligible impact on phone performance. For a pioneer, the process is remarkably simple. Download the app, create an account, and open it once every 24 hours to tap a button. This daily check-in is proof of engagement, signaling you are an active participant. It helps secure the network and prevent bots and bad actors. Bots and fake accounts are excluded by the trust graph. Energy use is minimal because the app isn't performing heavy calculations on the device. Users build a security circle, 3 to 5 trusted contacts, to boost security and earnings. That interlocking trust graph lets the consensus algorithm distinguish real users from fakes. That daily habit built a massive active user base crucial for network health. You vouch for people in your circle, they vouch for you. This social security method is far less energy-intensive than traditional mining. It still secures the blockchain ledger once mainnet is live. The mechanism is user-friendly and sustainable. The goal? Anyone, regardless of technical background or financial status, can join the crypto revolution. Energy use is minimal. The app relies on engagement, not computation. Consistent engagement plus trusted peers maintain network integrity. Now that we understand Pi, let's talk about the other half, the exchange-traded product. An ETP is a type of security that tracks an underlying asset. It can track a commodity, a currency, or a cryptocurrency. In this case, Pi. Think of it like a container that holds the asset, Pi coins, and its price moves with the asset inside. ETPs trade on traditional stock exchanges, like shares of Apple or Google. This makes them accessible to the general public. To buy Pi directly, you'd sign up for a crypto exchange, verify your identity, create a wallet, and learn custody. That can be daunting and risky. Lost passwords or scams are common. An ETP removes those hurdles. Buy through your existing brokerage account. The issuer handles buying, custody, and securing Pi coins, adding professional oversight and trust. Custody practices reduce self-custody risk for retail investors. Regulated products require disclosures, another layer of investor protection. ETPs let institutional investors, pension funds, and asset managers gain exposure without direct ownership. The professional firm handles market purchases and custody, providing liquidity and security. Shares trade on the exchange. Investors gain exposure to Pi's future through a trusted vehicle. Diagram brokerage account. Buy Pi ETP. ETP backed by Pi coins in custody. For many investors, this is a familiar, regulated, and straightforward path to participate. ETPs bridge digital assets and traditional finance. They simplify investment, widen access, and bring professional custody to crypto exposure. A Pi ETP launch in Europe places the product on regulated, visible exchanges. So the launch of a Pi network ETP in Europe is a pretty big deal. Europe hosts some of the world's most sophisticated regulated markets. To get listed, a product must pass a rigorous approval process. Regulators examine structure, custody, and investor disclosures. They look at the product structure and how underlying assets are held. An approval is a strong vote of confidence in legitimacy and viability. It signals Pi is being taken seriously by established financial institutions. Europe has a diverse base of investors, many curious but hesitant about crypto. Regulatory clarity, MiCA, aims to protect consumers and stabilize markets. It gives millions of Europeans a straightforward way to add Pi to portfolios. This could unlock a massive wave of new capital into the Pi ecosystem. Capital that would have been nearly impossible to attract via decentralized exchanges alone. Approval under this framework shows compliance and security. It sets a precedent for other alternative crypto projects to seek regulated paths. It proves mobile-first, community-driven cryptos can integrate with traditional finance. Media outlets will report on Pi ETP performance like any stock or fund. Increased visibility can create a positive feedback loop of investment and development. Capital can fund development, which can increase the coin's utility and value. A European ETP gives institutional credibility while validating grassroots support. It puts Pi on the radar of global asset managers and financial advisors. The launch could create a significant ripple effect, accelerating mainstream adoption. Packaging Pi into a regulated product helps normalize the asset class. When crypto products trade alongside stocks on major exchanges, perception changes. Financial advisors who once avoided crypto gain a regulated tool to offer clients. In Paris, Berlin, Madrid, advisors can now present Pi ETP as part of diversified portfolios. Clients can add a small high-growth component to retirement or investment portfolios. The existence of an ETP elevates public awareness and conversation. Financial news channels and websites will cover Pi like other listed assets. That visibility brings Pi into the daily lives of people who never heard of it before. A person sees the ticker, becomes curious, and discovers the Pi app and its community. This creates a new channel for user acquisition to complement word-of-mouth growth. Success could inspire other community-focused projects to seek regulated channels too. It provides a blueprint to bridge decentralized networks and centralized finance. If successful, it will encourage institutions to create similar products for other assets. This could lead to a broader range of crypto ETPs and more investor choice. Giving investors more choice further cements digital currencies as legitimate financial components. For millions of Pi users in Europe, this launch marks a pivotal moment. Many pioneers have been patiently accumulating Pi for years. The ETP provides the first major regulated valuation mechanism for their holdings. While the ETP tracks market price, listing gives a tangible market reference point. It transforms digital collections into recognized market value. This provides validation and excitement for the community. Beyond the community, the ETP opens new horizons for European investors. Consider someone interested in Pi, but uncomfortable with self-custody. A retiree or cautious saver can now invest through a regulated ETP. It lets them invest with the same ease and security as buying a blue-chip share. This broadens the investor base beyond crypto-savvy users. Increased liquidity and price discovery can help stabilize value over time. A more stable price is crucial for Pi to become a medium of exchange. Merchants are likelier to accept a currency with stable value and a liquid market. The ETP creates a deep market that supports Pi's transactional economy. This solidifies Europe as a hub for digital finance. Talent, capital, and innovation are more likely to cluster around Pi-based opportunities. More choice and better products follow as the market matures. Competitive pressures encourage transparency and stronger consumer protections. A win for the project, investors, and the continent's digital asset ecosystem. What could change now that Pi has a European ETP? Let's imagine some simple, practical shifts. First, retirement planning. A young professional might allocate 1 to 2% to a Pi ETP. Their pension manager can include it as a high-growth option. Millions could become passive investors in the Pi network. This dramatically increases capital and market stability for Pi. A small business owner in Italy might now accept Pi because conversion to euros is clearer with an ETP. Heard about Pi and its large community, she was hesitant to accept it due to conversion uncertainty. With a liquid ETP, she feels more confident integrating Pi payments into checkout systems. Consider the impact on family conversations about money and investing. A student who mined Pi can now show a Pi ETP listing on a major exchange. Suddenly, the conversation shifts. Internet money becomes a recognized financial instrument. This public product ties Pi's success to real market outcomes, adding pressure to deliver roadmap promises. It encourages enhanced security and transparency. Funds generated could fund grants for developers building on the Pi platform. This creates a virtuous cycle of growth, utility, and value. The ETP catalyzes broader ecosystem development and commerce. The launch of the first Pi network exchange-traded product in Europe is far more than a listing. It is a landmark achievement signifying convergence of grassroots power and established finance. For years, Pi quietly built one of the world's largest crypto communities based on accessibility. This ETP validates that vision and offers a regulated bridge for mainstream investors. It makes participation in the project's future accessible and accountable. A cryptocurrency's value is not just algorithms, it's the collective belief and engagement of millions. This development demystifies crypto investing, making it as simple as buying a stock. Through a European brokerage account, investors gain regulated exposure. The ETP structure adds professional custody and regulatory oversight. For Pi, this opens a vast new pool of capital and boosts global credibility. It creates a stable price discovery mechanism crucial for utility. Stable markets are essential for Pi to become a widely used currency. It's a catalyst for ecosystem growth and practical utility. The ripple effects will reach far beyond the PE community. It shows a path to mainstream integration for other community-driven projects. By navigating Europe's strict regulations, Pi helps normalize digital assets responsibly. It builds trust and encourages broader adoption. This helps transform consumer confidence in digital payments. It proves innovation in crypto can be responsible within frameworks that protect consumers. A key step in the maturation of the digital economy. Looking ahead, this journey is just beginning. Success depends on Pi's continued utility development and sustained community engagement. This launch is a pivotal chapter, a signal that digital currencies are moving into the mainstream spotlight. The Pi ETP is a symbol of an inclusive, accessible, integrated financial future where community power is recognized on the world's biggest stages.